Mortgage rates finally got a little relief last week due to a few key things we're going to discuss here in the market news segment. But after shooting straight up to 7.26%, we ended the week with rates all the way down at 7.08%, so a big drop. The number of people applying for mortgages saw a huge 27% increase this week. Although, don't get too excited, that's only because we're finally getting past the skewed holiday data. In reality, we're almost exactly to where mortgage demand was last year. Housing inventory saw a pretty big increase this week, which may suggest this year is going to be the first time since COVID that we have a normal inventory bottom. I'll explain that later. We also got a census report last week that showed there were 1.628 million housing units created in 2024, which is up 12.4% from 2023. However, that includes both single family and multifamily, including apartments. So we're going to take a closer look at just single family and just here in the South here in a minute. We're covering all this and much more in this week's market update. My name is Michael. I own a local real estate brokerage here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties, as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy, sell, or invest here in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today is January 20th, which happens to be Inauguration Day. Let's see what the data is telling us this week. And if this is an old video, you can click the playlist here to get to the latest weekly market update. Okay, starting with market news, let's address why mortgage rates came back down after shooting through the roof last week. Well, first of all, they had already gone too high to begin with. In order for them to have actually stuck up that high, the inflation data would have had to be very high on last week's report. So even if the report had just been totally neutral and met expectations, rates still likely would have come down some anyway. The bond market just way overshot the mark here. But then we got the CPI inflation report, and the data actually came in a little lower than expectations. Then on top of that, the holiday retail sales figure missed expectations just slightly, but still missed. Then I wanted to show you this chart because we also had a big rebound in the number of jobless claims this week, but as you can see, it's still nowhere near being concerning. So not sure that this really had any impact, but I just wanted to show it because the last few weeks we've been going straight down. Finally, we rebounded a little, but this is totally normal. You can see that swings of this size are normal. So don't know if that actually mattered. But maybe the biggest surprise was that Fed President Waller went on CNBC and said, I'm going to quote, "If inflation continues on this path, though it's the beginning of 2025, it's reasonable to think that possibly rate cuts could happen in the first half of the year," which sounds very different from what they've been saying. And if I had to guess, it's because they saw mortgage rates getting way too high. And they were like, we got to cool things off. So some combination of all these things led to the bond market coming back to reality and mortgage rates coming back down. They're still nowhere near as low as we would like them to be, but much closer to 7 than they were. Okay, moving on from that, we got that census report last week that showed there were an estimated 1.628 million housing units built last year. As I said, that's up 12.4% from 2023. And here's the chart. But again, those housing units, as you can see, we have single unit, 2 to 4, and then 5 or more, which goes, those are apartments basically at that point. And for the purposes of a housing market update, we generally don't care how many rental units there are. So let's look for the single family, starting with single units total in the country. This is, the top line is month over month, and the bottom line is year over year. So single units in the country were up 1.6% month over month, but still down 2.5% year over year. So even though we had a 12.4% increase in the number of housing units, we actually had a 2.5% decrease in the number of single family homes being built that were actually completed. And then if we want to look at our region, which is in the South, we can look at the 1 units here. And month over month, we were up 3%, but for the year, we're actually down 2.8%. And even overall housing, including apartments and everything, we're actually down 6.5% from last year to this year. So when you see these headline numbers saying housing units are up over 12%, for us down here in the South, that's not what happened. You got to remember, the United States is an enormous country. But looking at these numbers, actually the only region that had positive growth in single-family new construction housing was right here, the Northeast. If you look at their single units, they had year-over-year 19.2% increase. No one else actually had an increase, only in the Northeast. So there you have it. And then before we move on, in case you missed it, last week I found some very, very affordable new construction. It's located just 20 minutes from either downtown Fort Worth or Arlington. In fact, a lot of the people buying there right now are working in Arlington. But if you are looking for something affordable, these things are really nice. You can tell though, they're built close together. They have very small yards. So if you have a small dog or something, then this will work for you. Or if a lot of you just live in apartments and you don't really even need a yard anyway, this would be a great stepping stone out of that. It's going to be low maintenance, but the prices here start at just $269,000 for this 3-bed, 2-bath. It's about 1,300 square feet that you see here in the video, and it is really nice. And with the current incentives, you could buy this home with just $9,415 total cash to close, and your monthly payment, including taxes, insurance, HOA, everything, would be almost exactly $2,000 a month. So a very nice house that a lot of you will be able to afford. And then this one is the biggest plan they offer right now. And they have one at just $315,000 for a 4-bed, 2.5 bath with a little game room. And it's 2,054 square feet. And at $315,000 with the current incentives, you would only need $11,025 total cash to close. Your total monthly payment, including taxes, insurance, HOA, everything, would only be about $2,370 a month. And also, if you're an investor, call me about these as well, because they will sell some of them depending on the stage of the home to investors. And of course, the incentives are going to be different for investors than they are to owner occupants. But it's definitely something worth exploring. Okay, moving on, let's start with national housing inventory. This week, we actually had a decent little increase of 7,699 more homes for sale in the country. This gets us up to 25% more than last year. That's 1% more than we had last week, to a total of 632,118 homes available for sale in the country. This same week last year, inventory was only at 506,373. So we're off to a much better start. Even you can see the previous 2 years, they were still very tight on inventory. We had a huge jump up this year. So we are getting much, much closer to a normal market than either of the previous 2 years. Then for reference, the all-time inventory bottom of 2022, we only had 240,000 homes for sale. The peak of last year, we had 740,000 homes for sale. This same week in 2015, we had about 934,000 homes for sale. And the reason that this is a big deal, that we have a jump like this early in the year, is that historically speaking, the inventory bottom of the year should happen in January or February. However, ever since COVID, it's actually been happening in March or late April even. So if we do happen to get an inventory bottom now or even sometime in February, then that will just be one more sign that we're getting back to a normal market. Now let's look at new listings, and it's kind of hard to see because there are 4 data points jumbled up here together, but we have about 1,500 more new listings now than we did last year this week. So for the second week in a row, we are continuing to have more new listings than last year. And right now, we're at a total of 45,853 new listings, for a total of 45,853 new listings this week. Now looking at pending sales, this week we had 2% fewer sales pending than we did last year. That's right here. We're right in between these two lines right now, but this is not unusual. This data, as you can see, look at that. It gets really tight at the end and at the beginning of the year. But overall, it's likely that last week is going to be the bottom of the market for pending sales for the year. Of course, it's always those holidays. And as you can see, we should be and are starting to trend up from here all the way until May, June, something like that. But this week we have 252,586 homes under contract. Then the last thing we cover nationally is the percentage of homes having price decreases. And every year it's normal for about a third of homes to take a price cut before selling. Looking at the national chart, we are down to 33.49% of homes taking a price cut this week. Last year we got as high as 39.9%. The year before we got as high as 39.2%. And then in 22 we were way up here, got as high as 43.2%. And just so you know, if you want home prices to be coming down, then the number of homes taking a price cut would need to be going up, which usually doesn't happen until later in the year. Okay, moving on to mortgage rates, just like we talked about, we got as high as a 7.26 last week, and then after all that data came out, we dropped to a 7.07 and eventually ended the week at a 7.08. But you can see this chart, we got all the way down to the low 6s very briefly, and it has just been brutal ever since, all the way back to 7.25. And then regarding the number of people applying for mortgages, this is a mortgage purchase application index. As I said, we had this huge 27% jump up in the number of people applying for mortgages last week, but like I said, don't get excited. Look at this context. It's normal to have a big jump right here. The data is always very skewed, and actually I would say this data for me does not really become reliable until around March or April. That's when you can actually start paying attention to it. But I've been saying this for more than a year now. I still believe it. There's no reason to believe mortgage demand is going to grow significantly until rates get at or below 6% for a sustained period of time. That's when we're going to see real growth and sales are going to get back to normal numbers. The evidence we have for this is home builders have been offering below 6% rates, and they've been selling way more houses for a long time now than the existing market. Okay, now let's move on to the local markets. We're starting with the MLS data of Dallas County. So looking at the last 3 weeks, we went from 384 new listings to 487, and now we're at 603 new listings this week. So you can see we're growing. We grew 103 last week. We grew another 116 this week. So this spreadsheet is much better than what I had last year, so we can actually track the trend live here. So 603 new listings, 232 closings. That's 87 more than last week. 34 of those were immediate sales, meaning they contracted within the first week. 277 new contracts. That's 54 more than last week. And in total, we have 1,793 homes either under contract or pending, and that's 68 more than last week. So that was Dallas County. Looking at Collin County, we had 470 new listings. That's 128 more than last week. 191 closings. That's 67 more. 13 of those were immediate sales, which is actually 3 less than last week. But remember, closings, those happened 30 days ago. They contracted 30 days ago, so it's not reflecting the current market. This is the biggest lagger of all this data. We had 171 new contracts. That's 40 more than last week. And in total, there are 1,389 homes either under contract or pending. That's 44 more than last week. Now we're moving on to the Market Action Index. If you've never seen it, it just takes into account all this data, puts it into one easy to read graphic with a number. Anything of 30 or below is a buyer's market. Above that, we're asking how much of a seller's market are we in? And what we use this data for is just to say, are things looking normal, or is there anything we should be worried about? And what would be normal for this time of year? This should be the slowest time for real estate all year. So we should be nearing the bottom. Things should be slow. So we're looking at the median list price. It has been flat for a while. It would not be unusual if it was still going down a little, but we saw last week we had a jump up in price. This week cooled off a little bit, but overall we're just going up and down in this range here, which I would consider flat. Even though this is super flat, I still would consider this flat because it's just stuck in a range. Average days on market after taking a little dip, still not up to that peak of 110, but nothing unusual here. It would be normal for this to go sideways. Median days on market, of course, is slower to move. It's been going sideways for a while. Number of homes having a price decrease stopped its decline last week, more or less. Inventory, just like we saw nationally, it actually had an increase this week, and potentially last week could be the bottom of inventory for the year. That would not be totally unusual in a normal market. It would only be unusual for the last few years. And then the Market Action Index, we saw it looked like it bottomed out down here in November, but as of now, it's pretty much just going sideways. So nothing unusual for here. If anything, January maybe should be a little bit cooler than what we see here, but everything's looking fine. So let's move to Collin County. Collin County price, median list price is still trending down. They are a 35, which is 2 slower than Dallas, which was a 37. So yes, their price has not found a bottom yet. Their price of new listings did have a little jump up this week, but overall the trend still looks down, maybe sideways. Average days on market as well, pretty flat. Yep, flat from last week. Median days is going to be flat for a while. Number of homes having price decreases had a small decline this week. Their inventory climbed just like Dallas and the rest of the country, though not significantly, and their Market Action Index going pretty sideways as well. So again, all of that is typical for a January. Okay, now we're moving on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties, and these are ranked using that same Market Action Index number. Starting with the absolute hottest cities, Carrollton, Texas, who has been there for a long time, remains the #1 hottest spot at a 45.79, followed by Ferris, which remains in its #2 spot from last week. Richardson heats up 3 spots, Grand Prairie cools off 1, Louisville heats up 2, Plano cools off 1, Coppell cools off 3, Seagoville jumps onto the list at #8, Grapevine remains at #9, and Allen jumps on at #10 to replace Irving. So Balch Springs and Irving, which were #8 and 10 last week, fell off the list this week. Then we like to zoom in at specific zip codes. The absolute hottest is Grand Prairie 75051 at 49.82, followed by Carrollton 75007, Plano 75093, Plano 75025, Irving 75060, Ferris 75125, Grand Prairie 75052, Carrollton 75010, Richardson 75081, and Carrollton 75006. So if you have a house in one of these zip codes, then you should be able to sell for top dollar. Now moving on to the coolest cities and zip codes. Remember, a 30 or below is a buyer's market, so everything Lavon or higher, these are all the buyer's markets right now, starting with the absolute coolest. It's been Blue Ridge for a while. This week, Leonard took over, so Leonard cools off one, Blue Ridge heats up one. Sunnyvale remains at number 3. Lavon cools off one, Van Alstyne cools off one, Anna heats up 2, Red Oak cools off one, Rockwall heats up 1, Salina jumps back onto the list at number 9 after falling off last week, and then Royce City remains the hottest city on the coolest cities list, just barely. These are all very, very close in number. Then the absolute coolest zip codes. Leonard is the coolest, 75452, followed by Blue Ridge 75424, Dallas 75219, Sunnyvale 75182, Lavon 75166, Van Alstyne 75495, Rockwall 75032, Anna 75409, Grand Prairie 75054, and Red Oak 75154. And anything Lavon or higher, these are the buyer's markets in all of Dallas and Collin counties. Remember, if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description. Thank you for watching. I'll see you in the next video.